I have a theory. Now, whether this theory comes into play or not is all going to be based on how Trump and Xi Jinping, good old boy of China, is going to take it. You may or may not have heard that the Chinese Yuan, can't even say it, has come to very significant lows. Now, there are a number of things that can happen when a currency of that stature does actually drop so significantly. And that's only because of what's going on with Trump and this tariff story. But I'm going to lead with you all on the idea that China has one ace card that could, if it does happen, could lead us to the next Black Swan event. Ooh, he's all negative. No, it's questioning the validity of a move to the upside. I will always be cautious. Paul Tudor Jones said it. Always be defensive, defensive, defensive when it comes to putting down the capital. If you are dismissive of being defensive with your capital, then you're going to be ready to pay the players that are defensive. In today's live stream, I'm just going to give you a bit of an overview on what we can expect today. It's kind of quiet across the board in the sense of the calendar. We are going into this evening with the Bank of Japan, Ueda, speaking about where he sees the Japanese yen in regards to the interest rates. They're calling today turnaround Tuesday, given that $10 trillion has left the market. That's a lot of change. But quite a bit has gone into crypto. About 5 billion went into crypto. Is that enough? So what we're going to do, we're going to break it all down. Mad love and respect to everyone passing through. Let me just explain to you my logic. Now, if some of you agree with me, you can. If not, I'm going to just present to you the facts behind why I'm coming up with the idea that this could lead to a Black Swan event. So stick around, ladies and gentlemen. Let's have a conversation, man. Here we go. So, stock market. Here it is. Volatility has surged with $10 trillion wiped off global equities. That's quite a bit of money. And when $10 trillion leaves the market, it makes you think, oh my God, like, where's it all going? Well, it's going to safety assets. I mean, look here. See that yesterday, well, Friday's action, was 2,932 stocks took a snap to the downside. If we refresh this, just to put it into perspective, when they've updated everything, well, they haven't given us the data, but it looks like everyone is kind of concerned about what the story is with China. Here it is. China's yuan falls to its lowest level against the US dollar since 2023. Other articles are saying China vows fight to the end after Trump threatens an extra 50% tariff. What's the problem with doing that to China? Well, China is the world's factory. Now, if you recall back in the day when China had everything locked down from COVID, everyone was like, when's China going to open its doors? When's China going to consume oil? Because when oil's price goes up, China's machine is working. And oil's price right now is taking a smack to the downside. $60, happy days. That's one way of keeping the American people happy. But when China isn't operating, that's when the world's like, okay, we need to just be careful here. And based on what they're saying right here, it looks like Xi Jinping he doesn't care. But I think there is an ace card that they could pull, which could lead us into the Black Swan. Stick with me. In front of you are the major holders or the major economies that hold the US debt. So if I just zoom in just to put it into perspective for you all, you can see here, top player is Japan, right? They hold the most US debt, as in 10-year bond. Coming in second place is China. And then third place is the UK. Like, they're getting close with picking up the US debt and surpassing China. Okay? Now, if you go back, do you remember this about the refinancing? Well, it's refinancing $28 trillion in debt over 4 years, right? Interest payments are going up right now for the US. Their debt is getting worse. So, if Trump is putting tariffs on China and really trying to stick it to them, what could be, or should I say, what relationship does the debt that the US owes and the amount of bonds that China holds have in common. This is where the ace card comes into play. Let me explain. In front of you, you have the 2-year yield. It's going up, 3.8%. You've got the 10-year yield coming in at 4.2%. You've got the 10-year bonds coming in at 103, okay? Just to summarize it all, we've got the volatility index trading at these areas, which does suggest that if it's coming down, assets across the board should be appreciating, okay? So we're cool with that. So what does the fact that $28 trillion worth of debt, or the $9 trillion that they want to refinance very, very soon, and China's holding of US debt have in common? The stock market has crashed, which effectively means that investors have been taking their money out of the US stock market and going into the bonds. That has also led to the yields in the US to go down. Now, if the yields are going down, the interest payments are going down, that makes life easier for the US. In my opinion, the only thing that China can do to stick it to Donald Trump is not start an all-out war. That's going to cost them money. How are you going to really hurt the US? You dump US bonds. If you dump the US bonds, you then force the yields to shoot up. And when investors see the yields shooting up, they are going to then sit back and be like, wow, it's going up. I'm going to wait until we get ourselves a very good rate, forcing the yields to shoot up. The stock market goes down, and then you have this little problem of a debt that needs to be refinanced at the higher rates. Now, I'm not saying that that's going to happen. I'm saying that as a second largest holder of US debt, and you've got Trump plowing on the tariffs, well, it's clear as day that if they're going to fight to the end, the only next logical thing for China to do is to dump bonds into the market, create this awareness like, oh my God, who the hell is dumping these bonds? Why is China getting rid of the bonds? You're forcing the yields to go up. You're killing the plan that Donald Trump has to reduce the interest that is being paid or has to be paid on that $9 trillion. Because look, he's doing that $5 million gold card. He's putting the tariffs into play just so that he can reduce, and the Doge as well, just so that he can reduce all the expenditure that the US has so that he can effectively refinance that $9 trillion. So it's not as expensive. But if China dumps US bonds, that's just going to force the US to get into a very, very tricky situation. In other words, it would undo all of what Trump is trying to achieve. Now, I may be completely wrong with this story, but in my mind, it's the only logical thing that China can do. Is it worth them actually going to war, as in physically, getting the tanks, getting the planes, pressing buttons? Nah, you're going to try and screw China. They're going to try and do the same to you. And Trump's fully aware that they're holding on to their debt, fully aware of it. And if they dump aggressively on the bonds market, it's going to shoot the yields up. Ladies and gentlemen, you would have had your Black Swan event, which in my opinion would be a perfect time because the bonds market effectively would crash and then all the guys would step in when the yields shoot up to aggressive levels where investors will want to grab the yield, lock it in, and then you get your V-shaped reversal. That, ladies and gentlemen, in my opinion, is what I think could be happening in the marketplace. In cryptocurrency, we got other problems. This guy right here he actually did say that there could be a possibility that they have to get rid of a bit of Bitcoin, maybe. It says here, strategy warns of a 5.91 billion Bitcoin loss ahead of its Q1 earnings. Well, let's just go and have a look at where we are with the old MicroStrategy and understand what we can expect from that going into its quarterly one earnings. So the earnings are going to be in 28 days' time. So Michael Saylor really needs Bitcoin to shoot up from these levels to offset that, effectively, that loss. Given that the data does say, give me a second, the data does suggest that the following information. So here we are. So it says the Bitcoin holdings as of March 31st is 528,185. Still a little bit less than what the ETF balance is. We've got an ETF balance of 575,000. We have seen some activity in the last couple of hours. Also, where there's been some selling off happening in the ETF, nothing primarily from BlackRock other than this 122 Bitcoin that was put into Coinbase. But overall, it looks like things are okay for the ETF itself. And it goes in to say that average purchase price of 67,458 and the recent Bitcoin price is 78,000, which is 4.5% down in 24 hours. And the proceeds from share offerings is 7.69 billion. Okay, so it's effectively, it's getting to a bit of a pressurizing point where conventional investors who have gone in and bought the idea of this stock offering from Michael Saylor, they're going to start thinking, hold on a second, if the world's going nuts and everything's dropping, I need to get rid of my risk. I don't care if I'm taking a loss. I need to get rid of this. So that's going to be very interesting to see how Michael Saylor is going to address if there is a possibility that they do not default, but they're going to experience a little bit of a problem. I mean, if we just go and look at their quarterly earnings, it's absolutely dog as a company. But you can see now price is trading at $268 a share, but the strength is relatively there. But more importantly, I want to be paying attention to the number of funds that are actively involved in this. It says at the bottom here, at 1,229 funds at the end of quarter of March 2025. If the next quarter comes in and we see a reduction in fund managers, that is going to be consistent with interest coming away from MicroStrategy and wanting to go to other assets where they're going to need to hedge themselves or protect themselves against any future event that could impact the share price and eliminate exposure. Okay. So with that being said, quickly going over into the charts right now, just understand where we are. Just going over to the smart money, dumb money chart right here, just to put into perspective. We've effectively hit a very significant level right now on the smart money, dumb money, and it is beyond it. Look, it's 0.88, and it doesn't do this very, very often. If I zoom in and show you, you can see that we are at significant levels where there is a lot of smart money players actively buying stock right now on the discount. Now, some buyers are coming in to take advantage of this. They are expecting that the market is going to try and retaliate. We've got the S&P trying to make a little bit of a climb to the upside. You've got the NASDAQ trying to do exactly the same thing. Volatility index is rolling over. Just quickly going over into other assets across the board. We've got the BTC coming in. Looks like it wants to try and make a little bit of a move up to come back and recover this wick right here, which will be very interesting to see. We've got Solana as well doing the same thing. Ethereum still holding out. Quickly updating Bitcoin on the daily time frame to understand where we are. So anyone's like the bull market is about to begin, just please just bear with it, man. Like there is no bull market. I mean, if Bitcoin can get above this wick and close quite presidentially above this red vector candle block zone right here. Sorry, not Bitcoin. Let me just go to Bitcoin. There you go. So if Bitcoin can actually get back up above these two blocks, this is what we need to see. Remember, I told you about this block. Yeah, and then we've got this red vector candle block zone right here. I mean, these are your resistances on Bitcoin. Looking at the chart, we still got this green vector candle region down here that we need to be very careful about because they have smelt the liquidity. All right, so the only thing that could lead Bitcoin lower is this story about China. Now, remember, when a currency loses so much value, what does it force those investors to do? They ain't going to be sat in the Chinese currency now. They're going to be like, whoa, 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 whoa. I'm not liking this. I need to get my money and put it elsewhere. Dollar goes up. Stock market goes up. Real estate increases. It's showing interest from investors overseas. But don't get it twisted. China has just recently announced 2 domestic and commercial businesses do not invest in the US. So where you naturally think that they are now going to be getting their money from the Chinese yuan and then go over to the dollar, technically China's saying to them, you ain't doing that. Do not do that. And that's what China is like. So when I say there is genuinely a true trade war happening right now, it's happening. And the only ace card, like I said, that China has is to dump bonds on the US, which will thus increase the yields, making it harder for the US to repay that new debt or the debt at the new rates, which is why everybody right now is still playing with this. Look, it's going back up again. We're not in the 50-50 now. Investors are starting to come to terms with the fact that maybe the Fed is going to keep the interest rates high still. Quickly going over into the swap rates. I mean, euro, bloody hell, man. Look at that, 4.67% on a 6-day period. You're getting better than holding the US bonds. You see why Trump does not like the euro. Look at that. So for the next 6 days, if investors do step into the euro, they're going to be picking it up at 4.67% based on the implied rate differential. Look what they're getting on the Japanese yen going over into the USDJPY, good old dollar yen. You can see the dollar yen is just trading sideways. It's not really doing anything to be concerned about. I mean, gold's starting to make a bit of a nice recovery. And I do believe that the hedge is going to start coming into action where investors are going to be like, you know what, we need to hedge ourselves and protect ourselves from the madness that is unfolding in the marketplace. Now, moving on. So, could the 16 years of Bitcoin be just one Elliott wave? Yeah, potentially. Yeah, you know what? Listen, guys, I'll be straight with you. Whatever Bitcoin is doing or whatever the market is going to do, it will do it. Right now, you are trading the macros. You're going into the charts, you go into news anchors, they're all saying to you, traders are waiting, traders are waiting. Later on today, Trump could turn around and say, okay, we're going to do this to China. Market's going to react. Look, today we don't have anything in the calendar to suggest that we've got anything to worry about, but we are going into tonight. Tonight is going to be important because it's the Bank of Japan Governor Ueda speaking, and if he reveals any information about them increasing the interest rates, then what you have witnessed in the yen, because the yen's going up. When the yen goes up, listen, like I said, if China does not dump bonds on the US, if it doesn't dump bonds, this is going to be the likely scenario for the US. The Japanese yen increase their interest rates. The dollar then gets smacked. It drops, okay? Everything goes into the Japanese yen by currency as a safe haven. Then we've got the actual Japanese 10-year bond market. That will go up, which will then alleviate the pressure of the yen and, of course, encourage foreign investors to get involved in a currency whose value is going to appreciate because they've increased the interest rates, okay? So that's going to naturally grant foreign investors to want to get involved in that stock, okay, or in that currency, want to get involved in borrowing money and then putting it to work in the native country's currency, okay, or the marketplace. Now, what we need to see is the Japanese yen moving up. We will then see the euro moving up. We'll then see the dollar going down, and we will then see the 10-year bond market going up. And if we do see the bond market moving up and we see everything happening in that order, we would then be of the impression that the carry trade is now being unwinded, and we're going to then see assets across the board depreciate, which could actually lead Bitcoin to move lower. Now, from the order flow perspective, you can see, I mean, lots of traders are getting liquidated. Do we have anyone interested in buying Bitcoin? How many of you are interested in buying Bitcoin in this range right now? Because we got some flavor down here, man. These guys are coming in, and it's recent orders as well. Look, this order here, 34 million planted at 63,619, okay? 3 days that's been sat there. So if you want to understand the sentiment of investors, you look at where most of the liquidity sits in the order book. Then you zoom in and understand, are we selling or are we buying? Well, the problem that we've got is there is a high concentration of people that want to sell the Bitcoin, which means that they're going to sell the rally as soon as they can, which effectively means Bitcoin goes up. They sell those orders. Everyone thinks Bitcoin to the moon and all of that BS. And then it rolls over and goes to the actual true players in the market. Look, 69,587, 35 million down there. Go down a little bit more. We got another big order down here. 37 million at 67,402. Keep on going down. We got 20 million at whatever it was. There you go, 67,000. Move back. Got another batch. 34 million at 63,619. Go down again. We got anything else? 25 million at 63,000. What do we smell, ladies and gentlemen? We smell iceberg. If you're familiar with the idea of an iceberg, it's effectively one fat order, and it's being split up into various sizes and then getting put into the marketplace, okay? That is what could be happening right now with Bitcoin, especially by the principle of the order flow, okay? If you're in a bear market and we're in corrective environments, Bitcoin isn't done. I would be more confident in buying Bitcoin if it can actually finalize this vector candle. Why? Because that would then tell me that we're going back into the last consolidation zone that Bitcoin had moved away from but spent the most amount of time at, closest towards its all-time high. It hasn't spent that much time at its all-time high over here. You can see if Bitcoin had moved sideways from this range right here and didn't go anywhere, and it stayed within the range of 105 and 92, that would then and it spent the same amount of time over here like it did over there, well, the opposite way, sorry, then you would say that, yeah, there is good accumulation happening inside of this range. I've seen many people saying that Bitcoin's going to range out, it's going to do this, going to do that, and nothing's going to happen to Bitcoin, and Bitcoin decoupling more like, you know. So it's, if we don't get that consolidation, then we can safely say Bitcoin is going to run over to areas where it will actually grab the interest again. And this is one of the next areas that Bitcoin could actually end up at as we progress. The week itself is filled with data that could present that, okay? So FOMC minutes could be something that we got to pay very much close attention to. Okay, anything else? Tina, why doesn't China impose sanctions on the US rather than waiting for the US to do that to them? Like I said, it's what's China going to do? Even though China is the biggest, it's the world's factory, realistically, China has put on a little bit of a tariff back onto the US, but I feel like he's luring Trump. I really feel like it, because Trump wants to get the center stage. And I'm telling you now, if we start hearing about them dumping bonds onto the market, it's the only thing, financially speaking, in my opinion, that China could actually do. Now, they don't really have that much. I mean, they've got $774 billion in that. So it's quite a bit when you think about it. Would they dump bonds, given that their yen is so undervalued right now? It's horrible. Investors are losing money right now. So dumping US bonds, I think that would be the best play for them, if I'm quite frank with you. Any questions? Tina, here's a quick question. Tina, why would you put your money into bonds when inflation is running way higher than 4%-ish interest? Surely there's a better investment. There's two places that you can put your money. You're either going to go into the bonds, or you're going to go into gold, or you're going to go into dollar cash positions, okay? Now, the difference between the two asset classes, or the three asset classes per se, is with the bonds, you're either going to seek low risk and lock in a yield for a certain period of time, okay? Now, depending on where we are in the marketplace is going to dictate how long you decide to hold on that bond for, based on the yields, okay? Now, if you see that the stock market's going down, you're going to go over to the bonds market because you will generate a fixed income return based on the yield that you lock it in at, right? Cool. Then you've got gold. Well, if the expectation to cut interest rates coming in the future is going to happen, that means investors are naturally going to want to take their money out of dollars and go into gold, because gold in principle would be appreciating against the US dollar, because the yield on the dollar itself is now coming down because they're cutting the interest rates. So given that the Fed wants to do these big 50 basis point cuts in the interest rates, and they want to try and give 5 cuts this year, then you're going to see some really wild volatility in gold, okay? So that's another reason. Going into cash positions, if the idea of the bonds market is too volatile for investors, and investors don't know where they are with regards to interest rates, and you can see clear as day that they don't, because only yesterday this was nearly at 50%. We go into Friday last week, it was at 83% in favor of keeping the interest rates higher. Well, if you've got this inconsistency on the interest rates and where the bonds are going to, where the interest rates are going to be from the perspective of the Federal Reserve, the only safest thing you can do is go into dollars. But the problem with the dollar itself is you've now lost quite a bit of purchasing power, because it's now trading at only 2%. So that's a bit of a problem, isn't it? When you knew before, only a couple of weeks ago, it was at nearly 7.25%. So then was the best time to sell your stock, because you would have been selling your stock with a stronger dollar. It would have been worth more in dollar value. And then you could effectively have taken your dollars and jumped over to another currency pair, which was trading lower. And the value of that low currency pair would have allowed you to buy more because you had a stronger dollar, and you would have effectively hedged yourself and seen a return. For example, euro. So the hypothetical scenario would have been, you sell your stock when the dollar hits 7% appreciation. You then get that and all your profits, go over to the euro. The euro appreciates in value. You're getting great rates of return on the euro, and you've sold your stock. You've got more dollars to buy cheaper euros. Euro appreciates. Remember, if the masses do this, euro appreciates, and you've effectively locked in some decent returns. Dollar goes down. You're now in a perfect hedge. That's logically what money managers will be doing with their exposure. But you've got to understand, it's all about the perception of value. You know, like now, how many euros can I buy on the back of this dead dollar? Doesn't pay me to get into dollars, does it? No, it pays me to stay in euros. Why? Because over 6 days, I can get myself 4.67%, which is way more than what the 10-year bond market is offering right now. So, yeah, that's an interesting one. Ooh, S&P doing very, very nicely, ladies and gentlemen. Currently playing I'm currently in options right now, and I'm going to close it because I do not trust the market, but I'm currently in options and they are effectively doing very, very well right now. Have I actually changed my screen over? Can you see? Yep. There you go. So I'm currently playing some options right now and we've got £3,400 in profit and I'm closing it because I can't be bothered to sit in that no more. I have a very important day today and I'm out. Never mind. That's what it's all about. Paying yourself. Walk away. Tino, would you explain why if your leveraged order gets filled at the same time, the market maker places an opposite order against you? Yeah, that's what he does. You know? I'm going to show you this, and then I'll let you guys roll. Here we go. For anybody that's been with me from day one, mad love and respect, you know exactly where I'm going with this bad boy right now. So, here we go. For anybody new, hit the like button, subscribe. Here's the flavor. Here is Mr. Retail Trader. He's like, you know what? I'm going to get involved and start buying some Bitcoin. Here is the broker. Happy days. Now, behind the broker is the liquidity provider, Mr. Market Maker. All right? So the DGen comes along and says, yo, Mr. Binance, BTCC, Mexi, whatever. He says, I want to open $100 long. All right, cool. Give me that leverage. Yes, please. I'm a fiend for that leverage. Okay. 2 seconds. You ping that order over to Binance. Binance then pings that order over to Mr. Market Maker. What do you think Market Maker does? Do you think he gives you the same order back? No, because you'd both be in longs. Where are you going to get your money from when the profit is there? There has to be a counter order. So by the time you've put your order to Binance, Mexi, whatever, and then Binance then matches that order over to the liquidity provider bounces back to Binance and says, here you go, take this dude's order. Now Mr. Little Retail Trader has got $100 long in Bitcoin favoring higher prices. When he does that, he provides him a sell order because when you're buying, what are you being done? What's happening to you? You're being sold to. So Market Maker provides you the sell order, which means that the liquidity that comes into play, or when the account appreciates, so if your long is positive, you're eating into the Market Maker's liquidity, which is why I say to you, pay yourself, because it's their money. They're going to take more of your money in the future. Hopefully not. But any other peers that you have that play the game of trading, they're taking their money. So try and do as much as you can to take theirs, especially when you're trading leverage, right? So that's what happens. It goes to Binance. Binance pings the order to Market Maker. Market Maker pings the order back in the opposite direction, favoring lower prices. Why? Because when you are in a drawdown on a long, Mr. Market Maker's order is in profit. And whose profit is he taking? Or capital? Yours. Whose capital are you taking when it's in profit? His. And it's like zero sum, like for like. One man's fun is another's hell kind of story. Okay? Likewise, if you've got a short position, go to Binance. Yo, Binance, I want to go short on Bitcoin 100x because MicroStrategy is going to flop. Okay? Pings it over to Mr. Market Maker. Market Maker's like, oh, who's selling? What price is he selling at? I'll take that. Pings it back to Binance, back to Retail Trader. Your short has now been opened, and Mr. Market Maker is in a long. He buys when it drops. He sells when it rises. And that, ladies and gentlemen, is the vector candle strategy. So if you are new and you haven't studied the hybrid system, get involved in it because there's a whole section on market makers right here on the free course on the Traders Reality website. Get involved in that. And you want to expand on that, go over and become a platinum member where you get access to these PDFs, which all break down strategies regarding the hybrid system. And of course, not on this dark screen, but these are the checklists. And you get part of a Discord as well, where sophisticated traders that have been with me from day one are all talking about the hybrid system. And you can learn so much more quicker about the system when you get involved in that flavor. Okay. Now, quickly going back. Here we go. I've got a couple more questions here. Tino, I'm short on an altcoin. If I want to hedge, should I buy on spot or open long on futures? Well, if you go into the, wait a second. Right, okay, listen, go into the description, right? And if you're not using BTCC, use BTCC because you can effectively open positions on the NASDAQ. You can buy stock. You can go on Forex, all right, and crypto all at the same time. So if you're going to hedge yourself, okay, and you're saying here, you're short on an altcoin. If I want to hedge, should I buy on spot or open a long on futures? You really want to go on something that is going against the idea of what your asset is doing. That would be, in principle, one of the hedges, okay? Because the problem that a lot of people have when they hedge is you really need to be in a profitable position first to start hedging. Hypothetically, you take a long from this price point right here, okay? Price then works up in your favor. Awesome. The retrace back down is where you say, you know what? I'm feeling like there's going to be a little bit of weakness coming into play. So I'm going to open a short from this range. And you really want to put in a little bit more size on the short because you are going to be in it for a shorter period of time, okay? So when price goes in your favor and starts to work its way back down again, what you then need to do is you need to be very mindful in case it does actually go aggressively against you, start eating into the profits of the long, okay? Where you can actually adapt and add to the position only if it does really work in your favor. But hypothetically, you're in the position for a shorter period of time, okay? What you're then looking to do is any profits that you do. So hypothetically, you close off this position. You've now earned profit on this move, okay? You're still active with your long. You then notice that when price comes back down again, it's starting to base out, and you're then saying, you know what? I'm going to try and take another position because it looks like there's going to be more strength. The profit you made from the short goes into this area right here, okay? So technically, you've got yourself a free trade because you've earned profits off this move. And then if it works in your favor, happy days, you close off your positions, and then you make money, off you go. But it works if you are already in a position, okay? And if you aren't in the profitable position, and you're looking for another asset to hedge yourself against, you're going to really want to get involved in trading an asset that moves fast, like NASDAQ, which you can do on BTCC. So that's all in the description if you want to take advantage of that. Hey, Tino, for Forex, which would you say works the best? V-shaped formations, W formation, drop level 1, 2, 3, 50% vector candle, 3 candles above the 50 EMA? It's going to sound really crap saying this to you, bro. But every single one of them will work. It's just a case of which one are you going to use as and when it presents itself. V-shaped reversals always happen all the time. You just need to wait for the market to move at speed. That's what you got to wait for. The first vector candle above the 50 EMA on the 5-minute time frame. Go back in the charts and look at how price behaves above the 50 EMA on the 5-minute time frame. Go and find yourself as many green vector candles that appear above the 50 EMA on the 5-minute time frame and create an inventory of the variations of the first vector above the 50 EMA so that you can train your eyes to understand what was the environment like before it actually happened. That's the way you learn the hybrid system, ladies and gentlemen. Okay? Tino, fundamental economics question. China has legalized counterfeiting US products to undercut prices and sell products at 5 cents to the dollar. Wouldn't this be a detrimental impact on the US dollar? Yeah, but how many people want to have counterfeit products? Not many. Not many people want counterfeit products. There are the people out there that, nah, it's fake, I don't like it. All right? So, what time frame do you think we're talking about in the chaos to play out before we see an up? Just want to know what you personally think. Listen, it's all going to be responsive to whatever happens in the news. You know, it's all about whatever news comes out. The sentiment is shit, okay? Sorry, that's what it is right now. It is, all right? And investors are looking for a reason to get involved and take some activity. But remember, the risk, they don't have it in for long, okay? They're getting in, buying, and selling at speed. So if you want to pay yourselves, always sell the rallies. Get the... Anyways, ladies and gentlemen, I hope you've enjoyed today's live stream. I have to make a move, but hit the like button, subscribe on the way out, and just keep an eye out on China's ace card and sell XRP. Mad love and respect. Peace.